We've got a great one today. Why should we be investing in the space industry? We've got two folks who've got some incredible knowledge of the sector. Both Jodi Bartin and Stuart Martin are proponents of and have been active in the sector for some while. Jodi's a serial entrepreneur. She set up her first company at the age of 22. So we want to hear a little bit about that. And she now runs and has founded a corporate finance advisory business with a deep knowledge in the space industry and has done a number of deals in that. And she's also a freeman of the City of London, which is a fascinating position to have as well. Stuart is a 10-year CEO veteran of the satellite applications catapult, raising some just under £200 million for the Tech Innovation Centre. Has worked with countless companies in the space industry, is chair of the trustees of the National Space Centre. That sounds really exciting. And is, in his spare time, presumably, is a visiting professor at Imperial College, where he got a first in physics as a youngster. So that's kind of my little overview introduction. I'd love to pass on to you guys, and please jump in and tell us a little bit more about yourselves, and then we'll go into why we should be looking at the world of space. Jodi, do
Great.
you want to start?
I will. Yes. So thanks, Ben, for that very kind introduction. And yeah, I am a freeman of the city. I brought my sheeps across the bridge last year, which was not as traumatic when Mary Berry brought her sheeps across the bridge. Apparently, they didn't trust her at all, so that's understandable. But yeah, I'm Jodi Bartin. I'm CEO of City Court. But more importantly, I'm the founder of Space for Earth Fund. We're a new VC fund. We're currently in the process of our first close in the fund, and we're investing in really cool, sustainability focused, dual purpose space technology companies.
Amazing, thank you. And Stuart?
So yeah, as you say, I sort of started my career after a degree at Imperial College, and at that stage, it was looking at everyone was trying to push me into a career into science, into doing a PhD and becoming a professor and looking at space science. But the thing that always attracted me about space was its potential to do some real good and real benefits for people here on the Earth. And so I actually left the university sector to go and work on Europe's very first remote sensing satellite. It was called ERS-1, European Remote Sensing Satellite 1. So it's a very imaginative title. And then it all grew off from there, really. We started learning about how to control satellites, how to use satellites to support agriculture, to support mining, to support the energy industries, a whole range of things we were doing with that. Only problem was, in those days, these satellites were the size of a bus and cost hundreds of millions of pounds. And so wind forward about 20 years, still working in the space sector, we can now do those things in something the size of a shoebox and cost less than £1 million. And that completely transforms the economics now of what you can do in space and how you can use it to support all these different sectors, the agriculture, the mining, health sector, finance, pretty much any sector you can imagine now is using space technology. It's estimated about 20% of the UK economy is fundamentally reliant on space technology. And that number is only ever going to grow. So more and more, as we go through this 21st century, space technology is going to become the technology. We know we've got quantum, we know we've got AI, but actually space technology is going to become more and more critical to our economy here in the UK and around the world.
Very interesting. Thank you so much for that. So, I mean, I guess we can just sort of jump in. This is a podcast for investors. And why should we be thinking about space as an investment opportunity versus anything else?
Well, it's a massive sector, as Stuart said. So in Q3, there was about $5.8 billion invested in about 115 companies across the sector. Year to date, there's been about $49 billion invested into the space-enabled sector. And that's largely driven by VC funds. So 86% of that is VC activity. With the predominant investment thesis into satellite manufacturing, and obviously with increasing defense budgets, defense-centric capabilities, sort of like the Golden Dome stack and those sorts of companies is what investors are attracted to at the minute. And they're wise to do so. They'll get the more reliable returns from that industry because it's largely dominated by primes rather than small startups.
Right. And traditionally, this has been a very kind of long duration, capital intensive industry. Is that still the case? As in, when I look at it as an investor, am I stuck in these investments for 10 years plus, or have things sort of moved around and changed a little bit in this sense?
It really doesn't have to be. There is still infrastructure in space, but as I said, it's become much smaller. There's many more launch opportunities, so it gets developed and launched much faster. So the timescales have come right down. The capital commitments have come right down. And also, there is a cadre of businesses now who are using the infrastructure that's already there. So they don't have the same capital commitments, but they're using that infrastructure to deliver products and services, much like apps on the mobile phone network, you could say, in order to reach customers all around the world. The great thing about space technology is it's immediately scalable because satellites can see the whole world, and as we've seen from Elon Musk and Starlink, once he has his constellation of satellites available, he can provide those services anywhere. And so it's very easy and straightforward to scale these kind of businesses. The infrastructure has such a great global reach.
Yeah, and I would add to that, Stuart, that our Space for Earth fund is investing at growth stage, so late A through to Series C. So we're investing in companies that are at that hockey stick point, so that they're more likely to provide liquidity points for investors rather than startups. And there's a growing number of growth stock investments in the industry, whereas a year ago or even two years ago, there was very few growth stocks you could invest in, but now there's a growing number.
And while on this point, in terms of the kind of companies that you're investing in, I presume that increasingly these are becoming kind of asset light, as you're saying, Stuart, in terms of the amount of capital intensity that's going in is reducing. So are we now talking more about sort of software application type of players, or are we still talking about the hardcore manufacturers of product, if you like?
I mean, there is competition in the marketplace, and that competition segments itself. So sometimes some businesses are focusing on that low capital intensive applications marketplace, seizing customers and growing in that space. Other companies are being more vertically integrated, so they want to actually own and manage and install their own infrastructure and deliver those services to the end customers as well. I mean, Elon Musk and Starlink would be a good example of that. So it's a marketplace that's still shaping, and there are really opportunities that could be attractive for all different types of investors.
And then touching on sort of economics 101 in terms of public sector versus private, again, this is an industry that's traditionally been very much public sector led because of the capital intensity, and we think of NASA, etc., that dominate here. Does the public sector completely crowd out private sector investment, or what's happening to private sector investment in this regard?
So one of my first transactions in the sector was helping to fund Saxavord, which is the launch site at the top of Scotland. And that was a combination of public-private partnership and private and direct private investment. And that was a long time ago. So it was starting then when we had very little private investment in the European and UK space industry. Now it's much more mature. And the public-private partnerships are within most transactions, to be honest, and most companies within the space who are successful have a combination of government contracts and commercial contracts, and they naturally mitigate huge amount of risk. Government contracts are always are generally longer term, more reliable but lower margins, where the commercial contracts are higher margin, probably more lumpy, and not provide as much AR perhaps. So we like our companies to have both strategies. Well, I'm speaking in Dubai at the Dubai Air Show, and one of the topics I'm speaking on is public to private partnerships, because the Middle Eastern governments apparently want to know more about how we've done this in the West successfully. But Stuart, you might have some specific examples.
Yeah, I think the interesting thing around the role of the public sector is that the way that the role is changing. So historically, governments would have bought satellites, they'd have built the infrastructure around them, they'd have operated them, and they'd have provided the services directly. So I'm thinking like weather satellites. Governments will place big contracts with the likes of Boeing or Airbus to build a big satellite and then do everything through to the weather forecast based from those satellites. And obviously, defence was a big customer as well, and science was another big application for climate change. Everything we know about climate change basically comes from space. But now it's much more that governments are likely to buy data and buy services from companies who own and manage the infrastructure themselves. They've invested in the capital cost of the infrastructure, and the government can then just buy the end user services the same as any other commercial customer. And I think that's a real important sign of the maturity of the sector. And also the role of government has changed in support of the industry to actually be there as a potential first customer, or rather than investing in the tech and the R&D and the infrastructure in the first place. They've got to be there and try and help the development of the market at the back end of the process.
Interesting. And the nature of the revenue generation, I mean, you're talking about these sort of contracts, longer term, etc. The nature of the revenue generation, are these in the form of annual recurring type revenue, subscriptions? What's the nature and what's the kind of risk, if you like, profile of those revenues? So again, as an investor, I would care very much about ARR being central to my investment process, because I can apply a much higher multiple to that. So does that work the same way in your industry?
Yeah, absolutely, 100%. And that's what I touched on briefly earlier. So our fund is making its first investment at the minute into a world-leading company in the Earth impact-driven space technology sector, and it's all about ARR with them. So they're generating about 6 million ARR at the minute, targeting 22 million over the next 12 months. And it's due to the combination of the revenues. So they have both government and commercial contracts, and the combination of those two are fantastic. They get into organizations, and I suggest this is what investors look for, is companies that can get into organizations and land and expand, the spiderweb effect. So get contracts with big organizations. Maybe they're only a couple 100,000 in revenue a year, but an ability to expand and provide something that's unique. So our company in particular, they have both a platform with AI built into it that a customer can sign up to on a subscription basis, or they can just get an API for the unique data set that the company provides. So super interesting like that. And I think that helps to mitigate risk, is the combination. One thing you have to look for as an investor on the P&L is that revenue isn't grant revenue. Some companies include it in their revenue, grant income, which they do a service. They provide a service for that grant income or a development contract. But in our view, that's not pure revenue. So you just need to make sure when you do diligence, you strip that out.
Interesting. And then in terms of the customer base, you talk about customers. Are these businesses, corporations, or are these B2C type of contracts that are being signed?
So most space businesses are B2B. There are a few that are B2C, but and depending on where you are in the supply chain, then the businesses you're selling to will be other players in the space sector who are all developing together, or for the business that we've just been talking about, they're selling to end user customers who are outside of the sector. And ultimately, you need customers, in the supply chain who are outside of the sector, who are actually going to derive the value from the infrastructure. So it's those businesses, certainly I think at the moment, those businesses that have control over the infrastructure but also have direct access to the market, so they don't have critical dependencies in the supply chain. I think right at the moment, those are the ones that are the most attractive investment propositions. And there's a growing number of those that are coming through the system, and I think they create some great opportunities in the years ahead.
Yeah, in particular, quickly, just to add to that really quickly, agri-tech is a good example of that. So, we speak at conferences to farmers and they, about space tech and things like that. And they really don't want even one app, to be honest. But they certainly don't want 20 space apps. And they prefer to get there to utilize space capabilities in respect to monitoring and irrigation of their plantations through their aggregators at the minute. They don't want direct contacts with the technology providers. So currently it's the aggregators that are providing the technology down to the farmers. And eventually that will change. Big farms and plantations will mature and realize they can have more direct relationships. But at the minute, the aggregators are providing most technology within the agri-tech space.
Are we actually seeing kind of genuine results in terms of crop yield improvements and all these sort of things coming through? In other words, is the return on investment that the farmer's putting up in terms of their subscription to the aggregator actually making a genuine return today?
Definitely. And again, that's when you're looking at the businesses which have been in business for a couple of years, you're looking at those indicators from customers that are, they'll typically do a trial on a small number of fields, they'll evaluate the trial, and then if they don't like it, they'll drop off. If they do like it, they'll expand it across their whole estate. And it's kind of those retention and repeatable deals, and how the revenue per user is increasing year on year, that give you that confidence. Actually, no, they are delivering value to their customers, and that's those businesses are looking in good shape.
Very interesting. And then in terms of sort of moving to the investor world, into what kind of investors are investing into these businesses today? Are they sort of entrepreneurial, ultra high net worth guys who are taking big risks, or are the institutional investors now quite active in the space, or private equity, venture? Who are the types of investors investing here?
We have a range of LPs coming to us at the minute with interest to invest through our fund. But a lot of them are strategic investors that want to add value and get involved because it's such an exciting space. But we've also got big institutions co-investing alongside us, huge multi-billion dollar private equity funds investing both debt and equity alongside Space for Earth's investments. So they're generalist investors. Our thesis at the fund was always to bring generalist investors along with us on syndicated rounds into the space economy, and in turn creating a financial services economy in the UK and Europe for the space sector. And we've done that with our first investment. So if we can just bring one big generalist per investment, we're quite happy with that. It's not as fantastic as it sometimes is made to be. I mean, Elon Musk has been hugely successful. He's, another thing I would say to investors is, don't invest in companies that are going to necessarily go head to head with Elon Musk, whether it be SpaceX or satellite communications. Do something else. But I hope that within our first investment that we get early returns, and we can then provide a track record for our investors that have come in as generalists into the space sector, so they can continue to allocate capital to space.
Yeah,
Please,
just another thing on that point is another thing is that space is a new sector for many investors. And one of the things that we're finding, the people who are coming to us, is actually they want to understand it better. It can be seen as being very complicated. There's a lot of different technology elements to it. It's software, it's hardware, it's big infrastructure, it's communications, it's remote sensing. So there's a lot of terminology that you need to try and get to grips with. So one of the things our investors like about what the fund is doing is that we give them an entry point and an opportunity to learn. and that will be something that I think will pay dividends in the years ahead as the sector continues to grow.
I mean, this is clearly a very IP-led. It's deep tech, huge barriers to entry in terms of knowledge base, etc. These are all really sort of positive elements that support the industry. Um, who are going to be the winners and losers going forward? And you mentioned, don't compete against Elon Musk, etc. Love to know, in terms of specific product types, who are going to be the winners and losers over the next 5 to 10 years in this area?
That's a great question. I mean, there's a lot of launch companies around at the moment. Something like 50 companies around the world, maybe even more, who are planning on doing launch. We need launch, and that market's going to increase, but it can't support, I don't think, 50 companies, 50 startups. So there's going to be a lot of wastage in that space. I'll hand over to you, Jodi. You can come up with an error, and I'll think of some more.
Yeah, well, obviously the impact on Earth area is enormous. By promoting sustainable and efficient production of food and clean water, in particular in emerging markets. That's a big topic, and there's a lot of money to be made in it, but there's a lot of real human capital value add that you can have along the way. So you can have your sustainability component, but you can still be producing a commercial return. So that's a real hot spot. Defense is currently enormously hot, just because budgets have increased so much. So Germany came out with its defense budget a few weeks back. They're going to they reckon that they're going to invest 83 billion euros into the defense market in the UK and Europe, only giving 8% of that to the US this time, which is a big shift. And they're going to put 42 billion of that into space-related defense technology companies. So that's interesting. Now, other European nations need to follow them. Where are they putting it? They're putting it into companies, into both Earth observation companies, so looking down on the planet Earth and getting things up into space. But then the third category also is looking after things in space. So there's a select number of companies that are doing transformational things, going to try to keep order in space, and those companies are fantastic as well. There's Astroscale, for example, which is a listed Japanese entity. It's a global company, but it's listed in Japan. They've got a mission to clean up space, but amongst other missions that they've got underway. So cleaning up space, keeping refueling in space, all of that is really hot, and then keeping the planet Earth safe and clean.
Yeah, I think what we're seeing increasingly now is the opportunity for dual use technology. So that is, the companies who have a capability that is of interest in the short term to defense customers, but is also developing a proposition which has a much bigger potential scalable global impact in the impact space, in the climate space, or water management, or deforestation, or in some area like that. And I think those, having that dual track, so that route to short-term revenues, and also that access to a big longer term opportunity is, I think those are very attractive propositions.
That's interesting. So is as a subsector, if you like, does defense drive technology in space? In other words, does the original application start at defense? Is it 70% of the capital allocated, or more or less? And then there are these kind of civilian elements that come out of it? Or is defense only just one segment, and it's less than 25% of total kind of capital allocated in this space, so to speak?
In times gone by, that's how it worked. So the investment went into the space sector, created some capability, which you then then led to civilian spin-offs and business created as a consequence. These days, it tends to be the other way around, especially in Europe, that the investment's going into the commercial application, which then has, it turns out to have value to the defense community as well. And I think that doing it that way round, I think, is something that really differentiates the way that Europe is approaching the space sector at the moment, which I think which is quite exciting.
Yeah, on our advisory
And
side,
you're
we're
touching
actually
on,
doing deals like that, Ben. So we have defense related primes that have mandated us to find companies that can apply their technology to the defense sector.
Yeah.
and you're talking about kind of the European angle, which is really interesting. And my next question, I guess, is sort of on geographic mix in terms of capital allocation to space. You know, does the US dominate in the same way that Silicon Valley dominates in technology investing today, or is there a little bit more equality in terms of both idea generation and capital allocation?
My understanding is the UK is considered the leader in innovation in the space technology sector worldwide. The US still has the most amount of money. They're way ahead of the game, partly because of their, part because of SpaceX, and all the companies that need to develop technologies in America for SpaceX and NASA and Geo, as they've created that. This has all created this huge ecosystem in the U.S. And if you're providing government technology to government contracts in the U.S., you have to be a U.S. company. So they've got this ecosystem that just kind of bubbles away on its own and doesn't really care about anybody else, as you might expect. But we've got we got Ariane here in Europe. We've got obviously Airbus. We've got Leonardo. We've got some very big, great primes. We've got ISI, which is announced it's going to IPO at some point in the near future, which would be fantastic. Provide liquidity to investors. So we're catching up. What we do need is governments to get on side, start providing more contracts to SMEs and to our valued technology companies. Also funding to an extent, but the contracts I think are more valuable than pure funding.
Yeah. I mean, there's certainly no shortage of talent and expertise in Europe. We've definitely got that at a par from our cousins over the Atlantic. Historically, we have suffered from less capital being available, but over the last probably 5 or 6 years, we've had a lot of investment at very early stage businesses. So we've got a number of businesses now who are coming through that very successfully, creating good global businesses, now looking for growth capital. And so that's where the gap is right now. And that's what we're trying to address with the fund we're creating now, to give those companies the capital they need to be able to scale, access the global market without having to be attracted to funds coming from elsewhere.
Maybe you can talk a little bit about the kind of specific mandate that the fund is going to invest in, because space is obviously a huge area, but from an investment perspective, we're not talking about investing in journeys to Mars, etc., because I can't imagine that there's ever going to be a return on investment there. So that's very much the domain and realm of governments going forward. So where does Space for Earth kind of intend to invest?
Yeah, we're definitely not Moon and Mars or into launching people into space. We're more terra firma. So 80% of the fund is going to be allocated to companies that are making a real impact and an auditable impact on the planet Earth, with water and food production, decarbonization, and deforestation. 20% can just invest into space domain technology companies, so much more flexibility with that 20%. All of them, we want them to have dual purpose. And we just want to make a difference really with Fund 1. Fund 2 and Fund 3 will have slightly different strategies. We're only raising 100 million. It can only go, to between 10 and 20 companies. We want to partner with our companies, going on the board or advisory board, and going to be very active in those companies and drive the hockey stick growth. So we're trying to, people are opening up rounds for us. So we're reaching out to potential targets that, obviously aren't in fundraising rounds, that will value us and our team. I mean, Stuart is one example of someone that's been in the space industry his whole career and largely helped to create the space industry in the UK, many would argue. But we have about 5 or 6 more members on our advisory board, which also have been in the space industry for their whole careers and offer different elements in engineering and physics and astrophysics and things like that to portfolio companies. So quite unique. There's no other fund in the world like Space for Earth that offers this level of support to partnered companies that we that we invest into.
Amazing. So, well, look, thank you very much. We're just drawing to a close now, and I guess if we've raised interest amongst our listeners and viewers, how can we get a hold of you and learn more about your plans for investing in space and for the fund?
So yeah, thanks. You can email me jodi.bartin at S4 the number 4 fund.com. So it's Space for Earth. Our advisory company is City Court and Co, and that's also everywhere online. You can Ben, I'll give you my details so you can contact us. But we're based in London, central London. Advisory firm's been around since 1991, and if you Google City Court, you'll find the fund at the same time.
Amazing. Thank you so much for your time, guys. It's a fascinating area, huge growth opportunity, and no doubt you'll succeed beyond your wildest dreams going forward. So thanks again for your time, and wish you all the very best in the fund.
Thanks, Ben.
Take care.
It's a pleasure.